Hey guys, how's your Tuesday?
All right, good. Thank you, Scott. Hello, Mr. Andy.
Hey Steve, hi Scott, hi everybody.
All right, pleasantries aside, big happy face for the big Tuesday. Let's get into it. The slideshow is starting as people start to file in. The usual disclaimer that Andy and myself, we're not registered investment advisors. We are not financial advisors, and what I mean to say is we're not professionals, so anything you see or hear should not be taken or subscription as a. Here we are, been about 17 years in the making, Andy and are very proud of what it has become. And let's see here, go. The onboarding process is pretty extensive. I mean, in terms of what we're offering to help people learn, the learning curve is what I mean to say there. We've got a lot of touch points that are available to new users, primarily first and foremost the live trading room with Barry. It's free and it rivals a lot of price point trading rooms out there. So no reason, if you're not familiar with that, if you are familiar with that, there's no reason you shouldn't be in there, because it's a great free resource. And Barry's very generous with his time in demonstrating and answering questions about the Trade Ideas platform. And then during the lunch hour, East Coast noon, either myself or some of the other guys will take over Barry's live streaming on YouTube and just try and really make a jam-packed hour of Q&A and tech support and help people. So a lot of times, if you come in the morning and you're asking a question, we say, hey, you might want to drop by the afternoon live YouTube feed, and that will give you the ability to pull up a chair and ask questions. And there it is right there. All you need to do is go to trade-ideas.com/live, and that website URL will redirect you to the live YouTube link. It's pretty simple. So here we are. The familiar theme of my webinar is man and machine combined. It's the world in which we're slowly working ourselves into. The job force of 20 years from now is probably just going to be a lot of people monitoring data. The machines, they're just not as good. They're not as good with the human being and the machine combined. So the machine curates the ideas and the data for us, whether it's in oncology, in the medical service, or financial, like we're doing here. And the human really is going to be the best person to take that information and run with it. We demonstrate that a lot in the AI conservative mode versus moderate mode to try and show to determine if momentum is still in a machine by itself. Jones. All right, so it's June 9th, 2020. What a year. We're going to look back in this year and have some thoughts, all of us, at some point. Talk to our grandkids about this year. It's been one for the books. Market recap. I have some ideas, just kind of piling on what I talked about in Jamie's regular webinar yesterday. Andy has some thoughts on the AI recap. I see a lot of green over there today, so that's good. The trade of the week, which is the namesake of the webinar here, is active. It was PayPal. We'll go over the concept of how we found it, what we liked about it, and maybe how to manage it from here, and maybe even check in with next or last week's trade of the week in the SMH. I'm going to work on a scan today. I'm actually going to update a scan. A lot of people have asked after the test drive, and people are coming in and looking to start to create their own custom ideas. And a lot of people are on the right track when they say, hey, do you have something that shows kind of a good washout reversal? And I do. I've got something, but I think it's been kind of limited in its focus. And so we're going to open that up and duplicate that window and see if we can improve on that a little bit, with the point, of course, being, demonstrating how to do some of the features and how to walk yourself through what it is you're trying to do when it comes to custom scanning. And then I like to finish off with maybe a quick look at the sectors. There's always at least 2 or 3 sectors that look really good for the following day. And if we set any alerts along the way from anything we see in the sectors or anything in our new scan that we're going to kind of refine here, we'll set those alerts and share those out at the end of the webinar before I bring Scott in. So about 40 minutes of content if you're up for it. So, well, I've got the VIX up. That's rather interesting. I will save that thought for a moment because we'll start where we always do, in the S zone here in Techland. Made dirty air, but then all of a sudden we broke through in line at some point, maybe a day or 2 away from that, maybe 3 or 4 days with sideways action. But that's the ideal scenario before P500. So there's not a lot of cases of something that the rest of the train leaving the station, and there's when the small cap few days. Let's just put this for the guy is typically the evidence of that is I'm going to do higher into the close, and it's higher after a lot of resets every night, and it causes the following day to lose. It can be wonderful. I'm not buying it. They're kind of like a pretty good run. Maybe we should put it into the VIX in case we do get here in the headline. I have one more thought for those that were with me yesterday. I was talking pretty highly about real networks before today's candle, but I'm adhering it in our fund and just left it at that. The market, big take.
More flexible with our toying around. That's probably not the right term. You know, people. He has done. Neo has been a great performer since he introduced it back in last October. Here in the channel bar, if you bought 100 shares, I basically tell the algorithm, go out there and buy me. Probably the best way to explain that. This one's it got it. It's one of those kind of days. We're way extended, overbought. Doesn't mean we're going to sell off tomorrow, but you know, got to be on. We kind of climb that wall of worry, if you will. That always makes it repetitive. Mode was the best one to be in. And that means basically just getting out when Holly gets out. And some of them were timed exits. You got a couple of them here. Looking for a bounce. We'll go over this ONTO was the best trade by far. Look at that nice little entry there. Okay, stop. You know, looked good on the daily. Okay, everything was kind of lining up. You got a lower left to upper right looking chart. Pulled back here. There is your. Remember, this market was gapping down. This gapped up, and there's your buy signal right there. No pain trade if you were able to get it. Maybe you had to pay up, even if you had to pay up a few cents or even 10 or 20 cents, it was still a very nice trade, over $1 there in that trade. Another one is Frick. Another no pain, you know, I think it was a no pain trade. There's your buy signal. It could have dipped below it, possibly by a nickel or something like that, and then had a nice little bounce there. And pretty much Holly's exit was on this one was at 1990, pretty near close highs of the day. If you would have held it, you may have gotten 20 cents, but not a whole lot of extra meat on the bone, at least Jamie likes to say. Other than that, you know, you had some small trades in here and some small losers in conservative mode, but overall, if you were in conservative mode and were using my risk of $200 per trade, and you got out of everything in conservative mode, you would have made $486. Okay, moderate and aggressive, first of all, I don't like to look at aggressive because they ignore the stops. And that's what I'm talking about. See, this CCL, which, by the way, what the heck are we doing? Because volume in that was pretty anemic, but I have to talk to Michael about that. But if you'd have held on this all the way to the close and ignored the stop, you could see how much more you'd have lost there. Okay, so that is why I don't like to preach too much about aggressive. I'm not one that's going to tell you, I don't pay any attention to the stop, just buy them and hold them to the close. No, that's not the way it works, and you guys know better than that anyway. But not a bad day in conservative mode. There was one down here in which I thought had a lot of opportunity. Look at this. It got out for a flat on profit save, basically in zeros across the board in conservative. But look here. Let's take a look at this trade. There's your call right there, and it basically just went sideways and kind of slowly bled all the way until the close. So this is one where we talk about you may be better at your exits than Holly. She has some algos in her based on time and maybe some price direction, and if she feels like the trade's not doing what she thought it would do, she would just get out for a flat after a certain amount of time, which really was right here. So she held on for a long time. Yeah, she held on for a long time, then got out, but then it finally broke. This is where your patience over Holly, you would have more patience than Holly and made a nice little trade on that one. But Steve, all in all, pretty darn, good day.
Pretty solid for especially the value of this tool is for somebody who is maybe new to the market and they're completely overwhelmed by 8,000 different symbols to trade each day, and let the AI focus it down for you and you take it from there. Week. I like to surf 2 or 3 days and then reset. So sometimes I'll get out a little too soon after the bigger moves, but I've been around where you've got a really nice move and it reverses on you before you know what happens. I like to be a seller when the crowd is buying, and I like to be a buyer when the crowd is selling. We'll talk about that a little bit on that, maybe on this washout bounce. that we're going to get to in a minute. So that was last week's trade of the week. It's working very well. If you're still in it, I think you just want to make certain that the price action continues to behave as it did back here. You might have a couple of fits and stamps where it puts its foot down, but once it reaches that moving average or breaches through it, we need to have a nice closing candle at the end of the day, some nice reversal candles. And again, kind of setting the stage for what we're going to talk about here in a minute. So this week's trade of the week was PayPal. It was derived from the trade ideas scan that I use called the jam down to the 10 SMA. I think I've got a copy of and here's a copy of the email. There it was in the history Friday going into the weekend. PayPal had thrown kind of a little elbow down into that moving average like I was just talking about over there in the SMHs. And this is the candle I'm talking about here. This is the candle we referenced going into the weekend. And again, we're going to talk about how to maybe scan for something more like this. There's our signal candle. The trade was on after the high was taken out of that signal candle. Let's clear this drawing. And essentially the price is slowly ebbing in the right direction. The call here is to obviously try and keep the price above the 10-day moving average, but the actual stop in this one is to at least give it the backstop. Sometimes we will do that. Sometimes we'll give it that backstop in the 20-day if it's closely paralleling the 10-day moving average. So only 2 days old in this PayPal. What I would love to see, a possible scenario for you out there, would be a nice break of this level and we get a big push, and then that's where you maybe start taking some profits deep into the day if we do get a big push, maybe half or a third, start taking something like that off the table. Again, trying to be a seller when the crowd is buying. You're gonna do okay in this business if you constantly have a contrarian mindset. If you're going to be a herd chaser where you're going to start buying SMHs on the 4th day because it felt safe when the rest of us were anticipating and then participating in the breakout, if you're waiting for this candle up here before it felt safe, you're not really in the money. It doesn't behoove you to chase things in this market. You want to be a contrarian. All right. So with that said, what I've done is I've cleaned out my price alerts, and we'll start to maybe populate that as we go through here. So here's what I've done. This is a scan that you guys have probably seen a lot on my screen. It was very active today. It's looking for a lot of washouts. Focus here as I go through some of these names, on this stuff right here in the morning, these washout candles that really try and run the stops. But occasionally we get something, and this is where I'm going to start. We get something that opens right there. It gapped down and then traded up. What I'm really looking for are the ones that didn't gap down that much and then trade down and back up. Let's just go through a few more examples here, because what I want to do is I want to refine this type of scan. There we go. There was something else. Perfect. I don't want to see these. I don't like the ones that gap down and then move up. Again, I want to see the ones that started okay and then fell off the cliff and then rebounded very quickly. So in the morning, on this older version, I'm getting a lot of these gap downs with big green candles, and that's not really what I want. I want something that looks more like PayPal. And so again, that's not what I'm looking for. So I'm going to refine it. So my first step was I right-clicked and I went to duplicate window, okay? And now we're working on this duplicate window. And before I go there, just a couple of things in the configuration of the original washout bounce that are going to be a little different. Today's range, I had it at 100%. That's asking for a really long candle. I'm gonna shorten that up a little bit. That's one change. And then that's really the only change I'm gonna make. I'm gonna add a few more things. And so one of the things I wanted to add was I wanted to start finding stocks that were in at least an uptrend, or at least had a decent looking trend to them. So it's all the same settings, except I have composite rating, okay? So this is a single all-encompassing umbrella, call it what you will, multi-focused filter. It's looking at 10 different technical points and giving them a score, and about 4 or 5 fundamental points and giving them a score as well. And the score just is like a bell curve in college, all right? 70s are going to be your C students, 80 and above is going to be B students, and 90 above are going to be the really good ones. So I can basically keep out the D and the F students and the C- students by putting a composite score of minimum 75. I'm at least going to see some decent charts with a lot of filters in there. All right, that's one change that I've made. The other change that I've made was, remember I talked about how I don't want to see those gap downs anymore. So I'm saying anything that's gapping down more than I'm going to change that. Anything that's gapping down more than 1.5%, I don't want to see it. I want to see stuff that's at least opening up close to where yesterday's range was. So some of these charts are open, they're gapping down 4% and trading up. Again, I want to see the downward flush. And one of the reasons I'm looking for this is it's just my contention that the way the markets are plumbed, the plumbing in the market these days is all quants and algorithms. They don't trade like human beings. Andy and I were fortunate enough to trade in a market where it was two human beings on either side pushing buttons against each other. It was a lot of fun. It was a totally different game. It was literally like shooting fish in a barrel once you got used to it. But then the market got rid of fractions and went to decimals. That was hard. And then it turned it over to algorithms. And algorithms just have a different way of trading. And one of the price actions, one of the footprints Andy and I have noticed are these early morning washouts where they're essentially just washing out and taking out all the stops because they can see them. I mean, why do you think your commissions are free now? They're selling your good till canceled stop orders. They're selling you guys out while smiling and taking your money. So the algorithms buy that information and they all of a sudden have a four-dimensional chess piece board where they can just basically line up stop orders and mow them down like a bowling ball and reverse them at the end of the day and kick higher. Typically, those are great reversal points on a daily chart, and I want to try and use this scan to identify those. So we're going to try and improve on what I had before. Stocks that were gapping down, I accepted. I don't want to accept that much of a gap anymore. Even stocks that were in a downtrend, I would accept over here. I don't want to accept that anymore with the score setting. So the score and the gap filter, I've made a minor change here. And then over there on the other original one, I had today's range at 100 percentile. I'll even open it up a little bit more. We'll make it 85 percentile. So that the range between today's low and today's high is 85th percentile or higher. When the history, when we look at the history of this stock in our database, we can see, narrow range days, medium range days, and big candle days. Well, we're talking about a big candle day. Lastly, we want the position in that big candle day, position and range, to be near the top at the 95th percentile, but not more than 1%. We'll even open that up to maybe 0.2%, not more than 0.2% above yesterday's close. We want to kind of see it close to that. So with all those changes made, I'm going to click OK, and then we're going to go and do what we normally should do, is check a history out, see what we're getting, and see if there's something we could do better. So I'm going to start looking at these, and I think I know the first change I'm going to make, and I'll talk about it when I see it. There's a lot of stuff in here. And one of the things I do want to see are things that are at or at least near their 10-day moving average, not too far above, not too far below. Like this one's, way far above the 10-day moving average. And look, this is the wick. It shot down on the open and pushed back up. That's good, but down on the open and then kind of pushed back up, but it didn't really touch that 10-day. I would like to see something that did actually touch its 10-day moving average. So we're going to add another component here. We're going to say, because we got a lot of symbols in there, we're going to search for our 10 SMA, and we're going to use the daily percent. Let's go ahead and add that filter. I'm going to say I want to see things that are no more than 1% above and no less than negative 0.5% below. So they're going to be hovering at or around their 10-day moving average now. That should change the complexion of what we were just looking at. Oh, we're having a few less names come through here now, so we might be getting a better quality search. So let's take a look. Okay, well, it did its thing down and up on the open and right at the 10-day moving average for the most part. That one did it too. But I don't know if that was an interesting one. Yeah, I'm gonna turn something back off there. I'm gonna turn off the, I'm gonna say I want a bigger range. I want 100 range candles. I don't want it to be more than 1% gap down. And I'm going to take out that 10-day moving average filter altogether, because sometimes you just kind of have to use your eyeballs and open things back up a little bit. All right, so we've definitely opened this back up with a lot of decent trades. So let's just notice, if we can, why these would be coming through on the open. So they're shooting down and then shooting back up, and that's really what we're looking for. Oops, a lot of AGGs. Whoa, okay. Well, as I'm doing this live, I'm not really getting the results that I had wanted. It might just be that today was just one of those days that didn't really have much of the criteria that I am looking for here. But the point being is that every now and then we can take a scan and we can update it. If we don't want to lose the original configuration, you can just go ahead and click duplicate. All right. Yeah, I did it.
You know what, that happens to me all the time, Steve. I mean, some days you just, I mean, if you just don't get quality alerts, look at the market. I mean,
yeah, my intention wasn't here to come up with the best alerts. My intention was to kind of show how we can manipulate to try and bring in more values or less values. Some of the things I was doing, you know, with the candle. If I wanted to bring in more values, I could probably I mean, now I'm just kind of heading back to my original idea. If I just get rid of the score altogether, that's going to give me any old stock that basically had a pretty big jam down on the open and then a reversal. Different names. So, yes, not some real compelling names. I thought I might find some decent stuff to come through here, but I didn't. So I'm not going to share this, but what I am going to do is we're going to go through stuff that I normally want to go through, and if we see anything interesting, we'll call it out. This is the jam down buy. This is where PayPal came, and it's kind of the same thing I was looking to do. As I go through these blue arrow, because the blue arrow is basically signaling a level to go long and a contrarian back on that one. This one's rather interesting. What was that? Did 4 million shares today. Not really sure what they did, but look at that beautiful washout and then reversal. I'm going to start by actually making an alert on this one. We're going to start creating a few alerts. Now, again, the concept is after these washouts occur, sometimes the coast can be clear for a couple days for a nice move higher because all of those weak hands were already washed out. We already set that. Oh, this one doesn't look bad either. I kind of like this one. I'm going to mark this one up at the high of the day. And the reason these are coming through is kind of what I was trying to do on the other one, was just at least show me something with a good trend and a pullback that touches the 10. I might have been trying to get too tricky, trying to take the washout. Okay, so there's a couple from there, and then we're going to go to my bread and butter scan, and I like what I see right there already. Match.com has a giant short squeeze potential. That's the reason it's at the top of my scan here. Look at this nice pullback with a fake out yesterday, but a double fake out today. I'm going to pop this up and say, I think short squeeze. We got to remind ourselves sometimes why we set certain alerts, and short squeeze could be one of them from Match.com.
You might want to set that one a little bit higher, Steve. I think you set it right in the middle of the day.
Oh, I didn't. I missed that red candle.
Yeah, there you go.
Okay. See how easy it is? We can grab and move that and adjust, drop and drag. This one, not interested. Why? Look at all the spacing in between our momentum moving average and there. You don't want to be that guy. At least wait for this thing to consolidate. Don't want to chase. Again, we're not trying to be part of the herd. We're trying to be contrarian to the herd. And taking an initial entry at this type of setup, you'd be chasing the herd. Okay, that one might be good for a couple days setup. Again, when these are the ones that pull back and finally spike and pierce through that rising 10-day moving average, it starts to get interesting. Didn't quite catch iRobot today, but this thing has been on a tear lately. Just an unbelievable short squeeze tear. Carvana, people are not going out to car lots anymore. They're buying it online. So what's happening with this A-table scan is a lot of the names at the top here that are doing really well just so happen to be the benefactors of the new COVID economy that we have. Pets tried to make a move today, I think. Look at that. There's another example. There's another example after a 3-day pullback, beautifully.
No, so you for giggles. M-chip, go back to M-chip, and maybe if it has another down day right off the fast line there, yeah.
Okay, so look at this. It would probably try and the algorithms would probably try and sneak out under that low right there,
Mm-hmm.
under that low right there. So we'll just go ahead and if it
Yes.
tries, yeah, my thing else, gosh, this doesn't look bad either. Williams Sonoma, that's sideways action I really like.
Mm-hmm.
I wish it would have kind of washed out today though. I'm going to stay away from that one. Oh, interesting. And the only reason these are at the bottom of the list is that they have a lower short float. That's all. There can still be some really good ideas on. I like that one. I like that. See how nicely that resolved itself? Yeah. Okay. Well, let's look at SEDG.
Yep.
I like it. So I'm just going to go the intraday here and grab that high right there. We'll go ahead and set that. The A table alert. I'll be happy to give that out right now because we're getting towards the end here, and I'll be happy to share that. I'm going to put that in the cloud, and I'll drop it into the chat window, and you guys can break it open and take a look at it. All you have to do is just go to the configure. It's a very simple scan. It's not looking for much, just strong scores and high short float. So the people with the high short float are missing something that the rest of us are seeing. And we went through an awful lot of symbols there. That one doesn't look bad. Square, yeah, Square is the PayPal alternative. I'll tell you what, guys, let's do the same thing in Square. Let's set a pullback alert right about there, and we'll monitor it if it comes back. We'll call this pullback alert because PayPal could have sympathy with PayPal. And two more. Well, that looks like it's about it. Anything that you've been watching, Andy, you want to add to the list of things to keep an eye on?
No, I'm kind of the type that being patient right now, waiting for a market, maybe doing some scalping. So as far as the swing goes, no, not really.
He was one of the architects.
With the help of Michael Noss to write all the formulas for me, because there are a lot of custom formulas in there. So I took 10 technical metrics, and these are things that are both technical on the daily charts and on the intraday as well. Mostly probably daily, but using a lot of moving averages, 200-day moving average, 50-day, 20-day, 10-period moving averages, also using some position and range filters. So about 11 technical indicators combined with about 4 fundamental indicators. We're mostly technicians here. We don't get too tied up, but I did want to throw some stuff in there like earnings per share, a low cash debt ratio. I don't like to see a lot of debt. So without giving too much of our magic potion, it's basically about 15 to 16 metrics, mostly technical.
And if you look at Apple, Apple is an A student.
Mm-hmm.
Apple is an A student. I've added the score. Anybody can do that. Let's end here before I bring Scott in. This is a really good thing to do. If you want to just monitor what is the score of a stock and you've got input output, what does the score say about Amazon? Amazon is the teacher's pet at 100. You just can't do better than Amazon. It's at an all-time high. It's above all moving averages. It's just, you can't do better in terms of score. So what I want to show you guys here is you just launch the single stock window like that. And then once you've launched it, these are all custom areas that you can right click and configure. You would just basically go into the library and type in score. And there it is right there, stock composite rating, and then show in the column. You'd click that button and you have access. So no matter what you do throughout the day, as you type in things, you'll see, oh, Google has an 89 and Apple had a 94, and no wonder the NASDAQ's on all-time highs. These things are driving it higher. What about Carnival Cruise Line? Carnival Cruise Line is the Devil 66. What about Boeing Air? Boeing is a D student at 62 right now. These things are struggling. So a nice little way of just quickly getting a general breadth idea of how strong, based on just a simple bell curve that you'd find in school, you can do that and you can easily access it. Mm-hmm. All right. Well, oh, sector rundown. Yeah, thanks, Mike. I was about ready to jump out of here. Let's see if we can find just a couple of quick, decent looking sectors for tomorrow. Mike's keeping me honest here. I forget sometimes I skip over stuff. So I'm going to go quickly and I'll just stop on something if I like it. And again, we're just looking for tomorrow. We're not interested in chasing. We're not interested in catching knives. We're looking for a sector that might just be consolidating. IBB, well, we called that one out last week. I still think it's interesting, only because we got that big wick that kicked the price back in play, but a pretty interesting little triangle there. Keep an eye on the IBB. If it goes, it could have a lot of oomph behind it because it's been coiled up like a spring. Healthcare has really just been creeping higher. It's not really a fancy sector anyway. Silver, to me, silver looks like it's ready to keep going higher, but that's a whole other ball game. That's a commodity, and you got to risk overnight and weekend risk. Boy, I'm not really seeing a lot that really is UNG. Don't forget that. Now let's just go through a few more here, then I'll bring in. You're welcome for the help. Yes, thanks for the help. Able to trade confidently. That's what Trade Ideas does. Is it really does kind of help you trade confidently. Not seeing much in the financials either. I'm not really seeing much out there, guys, except a lot of extended charts. This, honestly, just big takeaway, this market needs a breather. It really could use a breather. And lastly, I'll leave you with this. I think the SPY is showing us just a big, ripe red target. I think this gap wants to be filled so bad. I'd like to see that gap filled over the next couple of days, something like that. And then we'll see where we go from there. All right, anything else, Andy, before we bring Scott in?
No, I agree with you. The market is overbought, and these are times where it pays to maybe be patient and wait for your pitch.
Yeah, or in Real Network's case today, it pays to stick to your guns and stick to your rules and get out. If it goes tomorrow, I won't care. I made a decision. I got out. I got to live with it. All right. Let's go ahead and bring Scott in for some final outward announcements, and then I'll see you guys next.
Earnings season to your advantage. Go ahead and grab it at Trade. We release this podcast wherever you listen to your pods and add us as a subscription. Check out the recent releases and get ready for the next ones. There's a code good all month, summertime, and it's case sensitive, so watch that cap. So summertime saves you 15% off the first month or year of any Trade Ideas subscription, Brokerage Plus, or upgrade from standard to premium. So go ahead and take advantage of that. You can follow Steve on Twitter at Today Trader. We also got at Trade Ideas, at QuantBot, and some other handles you can find. If you follow one, you can see the other ones. Trade Ideas Pro is the Facebook handle. Go ahead and like our page so you can share what we post with your friends. And any questions, shoot an email to info@trade-ideas.com. That goes into the help desk software to get you the best help as quickly as possible. Thanks, Steve. Thanks, Andy. Everyone have a nice one. We'll get the recording up later on tonight or tomorrow, and you get an email tomorrow with a link on how to find it.
All right. Thanks, guys. See you next time.
Thanks, everybody. I'll see you on Thursday.